Have you ever thought investing was for posh people with gold credit cards? Same here until recently. I mean, with Tesco meal deals costing a fortune, energy bills are still sky high, investing can feel impossible. But here's the kicker. This might actually be the best time to start. Because while everyone else is panicking, selling, or waiting for some perfect time, you could be quietly building wealth. So before we dive in, quick question. Ever considered, I'd invest, but only when the economy settles? Drop a comment. It's nothing to be ashamed of, honestly. Loads of us feel that way. I used to think investing was something only people in suits did. You know, the kind who say portfolio unironically and drink sparkling water with lime. Quick disclaimer, this video is for informational purposes only and is not financial advice. Always do your own research. Investing involves risk and your capital is at risk. What's going on with the UK economy? Let's get real. In early 2024, we officially slipped into a recession. 2 quarters of shrinking GDP, inflation sticking at around 3.5% in May, and bills shooting up. Water and energy bills were over 26% in April 2025. You open your Monzo app and it's like, who spent all my money? It was you. On just living. Wages haven't kept pace either. Real pay growth has been sluggish, especially for under 35s. While rent is taking up nearly 40 to 50% of take-home pay in places like London or Manchester, student loan repayments have restarted in full force, and tax thresholds are frozen. So even if you do get a tiny raise, more of it gets taxed. It's a joke. But here's the wild part. Despite all of that, the UK's economy actually grew 0.7% in Q1 2025, the fastest pace in over a year. That beat US, Germany, France, basically the whole of the G7. I know it doesn't feel like a boom, but that's what makes investing feel so backwards. The market moves ahead of the headlines. The FTSE 100 even hit all-time highs of, don't quote me on this one, 8,884 pips in June. That's mental, considering that it wasn't long ago that people were saying the UK is uninvestable. So yeah, the vibes are weird, but under the surface, stuff's happening. Big firms are making money, exports are bouncing back, and sectors like tech and energy are quietly booming. Also, the Bank of England interest rates have held steady at 5.25% for months, but economists reckon that a cut might finally come this August. If that happens, borrowing gets cheaper, business investments go up, and markets might push even higher. Why is that good for you? Here's the sweet spot. Markets usually climb before things feel good again. It's like this. If the economy is a hangover, the stock market's already thinking about breakfast. When you invest during a dip, you're essentially buying good companies at a discount, like snapping up a designer jacket in January sales. The idea is simple. Buy low, hold on, sell high. But most people do the exact opposite. They panic when things dip, they sell off, and then they FOMO back in once the prices have gone up. We're not doing that here, we're playing it smarter. Think of it like buying concert tickets before the band blows up. You get them cheap, enjoy the rise, and then you get bragging rights when the price triples. So start now or wait. Truth bomb, no one nails the bottom of the market. Even so-called experts get it wrong. You'd have better luck predicting the British weather. One day it's sunny, and the next is raining sideways. Investing is a bit like that. If you wait for the perfect time, you'll be waiting forever. Instead, go with pound cost averaging. That's just a fancy way of saying, pick an amount you can afford. £10, £50, £100 a month. Invest it regularly. Ignore the drama. It smooths out the ups and downs because sometimes you'll buy when it's low, sometimes when it's high, but over time it averages out. No stress, no spreadsheets, no physical powers required. Even during the 2020 COVID crash, people who stuck with investing and kept putting in money month after month ended up ahead just a year later. It's about patience, not perfection. What should you actually invest in? Now, this is where most people get overwhelmed. Stocks, bonds, crypto, NFT, golds, it's a lot. But if you're just starting out during a recession, keep it boring and broad. Index funds are your best friend. Think of them like a big basket of companies. FTSE 100 covers the top UK firms like BP, Tesco, NatWest. S&P covers US giants like Apple, Microsoft, and Amazon. You're not putting all your eggs in one basket. You're spreading them across hundreds. And that makes things less risky, especially when the economy is a roller coaster. These funds are low fee, hands-off, and historically reliable. Over the last 50 years, the S&P 500 has averaged around 10% a year in returns, even with multiple recessions in that time. Defensive stocks are another solid bet. These are companies people spend money on no matter what. Think food, healthcare, household goods. Like, even in a recession, we're buying toothpaste and beans, right? Companies like Unilever, AstraZeneca, and even Greggs have stayed relatively steady, even when the rest of the market wobbles. They're not sexy, but they're steady. Dividend-paying stocks or funds. These pay you a slice of the profits just for holding them. FTSE 100 companies are forecast to pay out around £90 billion in dividends this year. That's roughly a 5.25% return just from holding them. Imagine getting paid while you wait for the value to grow. And if you don't want to pick stuff yourself, platforms like Vanguard, Nutmeg, Moneybox, Free Trade, and Trading 212, they build a portfolio for you. You just answer a few quick questions, pick your risk level, and boom, they sort the rest. It's like Deliveroo, but for investments. Most of them even offer ethical or sustainable options, so you can invest without backing oil spills or sketchy companies that exploit workers. How much do you need to begin? Spoiler, you don't need a fortune. Some UK platforms let you start with as little as £1. No joke. You could literally skip one Blank Street coffee and start investing instead. Plus, fractional shares means you own a slice of Amazon or Tesla without needing hundreds. Think of it like ordering a pizza with your mates. No need to buy the whole thing to enjoy it. And yes, you can invest through an ISA, specifically a stocks and shares ISA. This means all of your profits are tax-free. No capital gains tax, no income tax on dividends. Absolute winner. You can put up to £20,000 per tax year, but don't let that freak you out. Start with a fiver and build from there. Is it risky? Of course. But doing nothing is riskier. Here's the deal. Yes, the stock market goes up and down. If you leave your money in a savings account earning 1.5% and inflation is at around 3.5 to 4%, you're losing money in slow motion. It's like standing still on a treadmill that's speeding up. We're already behind as a generation. Wages haven't kept up. Rent is a nightmare. And buying a house feels like winning the lottery. If you're not investing, even in small ways, you're letting inflation eat your money for breakfast. The key is to diversify. Some UK, some global, some equities, maybe a bit of bonds, a mix of growth and income. And never invest money that you need for next month, friend. This is long-term money. 5 years minimum. 10 years? Even better. If you check your portfolio every day, you'll lose sleep. But if you check it once a year, you'll probably see growth. Let time do the heavy lifting. Okay, quick recap. Start small. Even £10 a month is enough. Use pound cost averaging. Choose index funds and defensive picks. Ignore the hype and short-term shocks. Hold for long-term. Think 5 to 10 years, not 5 to 10 days. Let the stock market be the slow cooker for your finances, not the microwave. What's the hold-up for you? Is it the fear of losing money, not enough spare cash, or just straight-up confusion about where to start? I promise you, everyone has had those thoughts. Let's unpack it. Drop a comment. And if this video has given you a confidence boost, hit the subscribe button for more UK finance chats, minus the boring bits. Drop a like and send it to a mate who's been saying, I'd invest someday. Cheers for tuning in. Catch you in the next one.